The Tax Cuts and Jobs Act of 2017 was the largest overhaul of the tax code in over 3 decades. One of the more significant changes brought about by the reform was the increase of bonus depreciation on assets used in business from 50% to 100%. This was put into effect for qualified property acquired and placed into service after September 27, 2017 and before January 1, 2023. In order for property to qualify for the 100% bonus depreciation, it must have been acquired by the taxpayer after September 27, 2017 and placed into service in their business between September 28, 2017 and December 31, 2022. Generally, the property would have a recovery period of 20 years or less under the Modified Accelerated Cost Recovery System, or MACRS for short. Typical property falling under this recovery period includes computer hardware, some computer software, and both furniture and fixtures. Effectively, the 100% bonus depreciation allows the taxpayer to expense the entire amount of the cost to acquire and place the asset into service immediately instead of expensing it ratably over the deemed life of the asset. It's important to note that, for the most part, property that's depreciated under the Alternative Depreciation System, or ADS, is ineligible for this 100% bonus depreciation, with few exceptions, as noted by the final regulations. Qualified improvement property is generally defined as any improvement that was made to the interior of a non-residential real property and placed into service after the building was up and running. Prior to the Tax Cuts and Jobs Act, the tax code categorized certain similar improvements into 3 separate categories: qualified leasehold improvement property, qualified retail improvement property, and qualified restaurant improvement property. These improvements were eligible for a 15-year recovery period and qualified for 50% bonus depreciation, as they had a recovery period of less than 20 years. With the recharacterization of these 3 categories into one general category entitled qualified improvement property, the 15-year recovery period reverted to 39 years as of January 1, 2018. Accordingly, qualified improvement properties aren't eligible for the new 100% bonus depreciation as of this date. The result is that property that was originally eligible for 50% bonus depreciation is now ineligible for 100% bonus depreciation and ultimately has a recovery period of 39 years. It was anticipated that a correction would be made to characterize qualified improvement property as 15-year property. However, this hasn't been corrected through the newly issued final regulations and the newly drafted proposed regulations, though this matter may still be corrected in the future. Although the bonus depreciation rules may seem straightforward, understanding and applying the final regulations and newly proposed regulations to your individual business situation can be complex, so it's always a wise idea to consult with your tax advisor before taking any action. I'm Chris Souza with Untracked Early.